We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point.
So now that the FOMC meeting is over, they have 41 days and 17 hours until the next meeting where they're going to discuss interest rates. And so with the interest rates dropping 25 basis points, there is a 93.6% expectation for the Fed to keep the rates at the current levels come January 29th. And right after this meeting, this caused the crypto market to plummet, with Bitcoin dropping to $100,000, XRP dropping down as low as $2.25. So is this something to worry about, or is this completely normal? And what are the expectations as we go into January and the rest of 2025? Well, in my video yesterday, I talked about how the Federal Reserve completely wiped out baby boomers that are investing in the stock market right now. And in today's video, what I want to talk with you about is what the Fed's plans are to adopt cryptocurrencies, because there's been tons of people out there saying that they've been lying to you about adopting XRP. So this happens instead. We have to play some clips for you guys about what's about to take place for XRP, XLM, HBAR, XTC, Algorand, and several others. What is on the agenda for mass crypto adoption over the next 12 to 33 days, how the Federal Reserve plans on implementing Ripple, XRP to completely change the entire banking infrastructure over the next few years within the United States and even globally. Plus, we have to talk about the Bitcoin to the US dollar price chart and what you should be focusing on the rest of this bull run to make the most amount of money possible. So if you're feeling bullish, comment 777. If you're feeling blessed, comment 777. And if you're going to become the first millionaire in your family tree, you know what to do, man. Confirm it by tapping the subscribe button. Let's run it.
If I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
All right, bull runners, welcome back to the channel. So with Jerome Powell saying that they're not allowed to own any Bitcoin and they're not looking for a policy change on that, Bitcoin crashed down to $100,000 and the rest of the market followed. XRP experienced a steep pullback, but a lot of people are saying like, there goes XRP pulling back again. Guys, it's the entire market pulling back. And I'm going to show you on the charts what this has an effect on for Total 2, the rest of the altcoin market. What this guy says drastically impacts your portfolio. So that's why it's super important to subscribe to the channel to stay up to date with what's going on in the market, because I want to give you a forecast for where I see things going and my expectations based on the facts, based on the data for what's about to come over the next month. So looking at the Bitcoin to the US dollar price chart on the daily compared back to the past, we're still in this bullish channel. So while a lot of people are freaking out, they need to zoom out. When you're in doubt and you're looking on the hourly, it's very easy to get lost in the sauce because you have a short attention span. You're like a goldfish. And the reason why I say that is because you've been trained and psychologically engineered to be addicted to short-term temporary pleasures through companies like Netflix, Instagram, Facebook, scrolling on social media. And so most people don't have the attention span to watch a 20 or 30-minute video. And that's why they're going to stay broke forever, because they operate off of emotion and they're too zoomed in on the hourly. For example, if you look on coinmarketcap.com, this tracks the 1 hour, the 24 hour, and the 7-day. So a lot of people are looking over the past 24 hours and they're freaking out. They're like, oh my God, XRP's down 10%, which is really drastic compared to the stock market. Bitcoin's down 5%, Ethereum's down 6%, and a lot of these other projects down, Chainlink down 11%, even more than XRP. So welcome to crypto if you're brand new. When we zoom out and we go on the daily candles right here, we can go on the 1 minute, 2 minute, 45 minute, 1 hour, 2 hours, etc. Well, we're on the daily. You can see we got rejected from this ascending resistance right here. We've had multiple points of contact since the 21st of November. We wicked off of it on the 5th of December. And so we just simply got rejected from it. So I would expect Bitcoin to just stay within this bullish channel, very similar to what happened here, going back from October of 2020 until we broke above it in December, at the end of December after Christmas in 2020. So around this phase right here from the 30th of November going into the 16th of December, even to the 11th of December, we saw Bitcoin pull back from $19,800 and it dropped 11% to this ascending support right here and bounced off of it and then broke out. And so if Bitcoin continuously chops sideways, it sells down a little bit further to this ascending support, we would want to see this support hold and for Bitcoin's price to rebound off of it to the upside and inevitably break, $110,000 going into January and deviate from this channel to the upside. Otherwise, if we trade to the downside, then I would just expect that to be a liquidity flush before we sweep everybody out of the markets that would be longing Bitcoin to flush out leverage traders before we continue higher. And the reason why I believe that is because we are still very far off from the 4-year market cycle high. For example, if I zoom out and I go on the weekly chart right here, and I put up the Bitcoin stock to flow rainbow indicator that shows the days until the next halving, and I were to just increase the opacity on each of these colors right here, just to make it easier for you guys to see, this essentially just tells us when is the best time to buy, when is the best time to sell based on Bitcoin's inception. And so this is the most important indicator, in my opinion, that tells us where to sell Bitcoin and where to sell altcoins, because altcoins follow Bitcoin. With Bitcoin pulling back, altcoins pull back even more. When Bitcoin rallies, altcoins rally even more. Now, the Bitcoin stock to flow rainbow indicator has shown us that the top for the market has come in every single time. This is no debate. This is just based on facts here. And could this time be different? Sure, anything's possible. But so far, we are 3 for 3, where the top has come in during the green phase of the market. And also I can measure this out and use other indicators for confluence for you guys to prove this. But for the sake and time of this video and the other information that I have to get into, I'm not going to cover this too much. I've covered this in other videos, but every single time the bull market has topped out at green. So the question then remains is, well, where are we right now? And how much further do we have until we are at green? Well, we are in the yellow phase right here. And during the yellow phase, it's the most parabolic part of the market cycle, unless we are mirroring very similar to what happened for the 2016-2017 run. Yellow was parabolic. Green was arguably just as parabolic, if not even more parabolic, because there was less liquidity in the market. And going back the cycle before then, yellow, still parabolic. There was a little bit of a consolidation, but then green was the most parabolic. And so we haven't seen nothing yet on this run up. So what I would expect is for yellow to be a hybrid between of what happened right here from 2020 to 2021 to what happened back here from 2017. And so what I'm going to do is I'm going to trace up on the bars pattern each of these phases right here. And we're just going to measure how long it took on the weekly chart right here to go from yellow to green. So the most recent one is the last bull run. I'm just going to trace up the chart pattern from right here. We're going to move it over to where we are right now. And it would look something like this. So that brings us all the way until the 7th of April of 2025. Now, it topped out before then, so that's roughly the 10th of February of 2025. Before that consolidation took place and we saw the sell-off going from yellow to green, let's put up the cycle before then and just take the bars pattern right here, move it over to where we are right now without adjusting the length or the time frame whatsoever and just put it up next to the chart. That would bring the peak to about the 7th of April of 2025. And then the cycle before then, let's put it up to where we are right now. And that would put us exactly to the 7th of April of 2025. So it's the exact same time frame in terms of how long it takes to go from yellow to green each cycle, because on how the 4-year Bitcoin halving works. But obviously the chart looks a little bit different for each of these. Like this cycle right here, going all the way back to the first market cycle, was a lot more volatile, whereas 2017 and 2021 were a little bit more similar. Although 2017 is when we transitioned from yellow to green, we just kept going, whereas 2021 cycle, we saw this steep 50 to 60% pullback for Bitcoin and then a final top during light green. And so nobody knows exactly how high that will put the market. And for people asking me, where's my price target before I sell like altcoins or Bitcoin or XRP or whatever, I don't sell based on price targets, because most people that were waiting for Bitcoin to hit $100,000 last cycle, well, it topped out below $70,000. And so they round trip their bags all the way to the bottom and their portfolio dropped another 77%. So if they had $100,000 at the top, they would have like $33,000 at the bottom. So that's how you lose your money. That's how you get wrecked the best thing that you can do, again, not financial advice because crypto is risky. You could lose money in these markets. I'm just sharing education, informational purposes only, and my opinion, which does not mean that you should do the same thing as me because I might have a higher risk tolerance than you. Well, I sold Bitcoin at $57,000 right over here at this phase of the market cycle because I saw where we were on the Bitcoin stock to flow rainbow indicator. Because if you just look at the chart like this, you're just seeing these Christmas green and red candles, the bullish candles and the bearish candles, right? You're like, well, where do I sell? Because it's easy to see looking back in the rear view mirror where the best time to sell is. But when you're looking at it right now, you can't see where the markets are going to go. You can only see where they've been going back to the past. And so this is why we use key indicators like moving averages, the RSI, the MACD, stochastic RSI, and then some other nuance indicators that literally tell us when the top is in. For example, if you pull up TradingView right here, and I'll leave an affiliate link in the description below. Yes, we do earn a small commission if you decide to upgrade to a paid account. But if you guys use a free account, that's the starting point of what you want to do right now. You at least need a TradingView account so you can be able to look at these charts with us when we make these videos. But when I click on indicator right here, I have some favorites right here. So one of my favorites is the Pi Cycle Bitcoin top indicator and the Pi Cycle Bitcoin bottom indicator. And what this tells me is where the bottom has been in the past and where the top has been in the past. And it has called it to the T, the past two bull runs based on the technical high. So the technical high was back in April of 2021. The real price high was in November. But if we go back even further than that to the prior cycle, it called the bottom pretty much to the T right here as well too. It called the top to the T. It called another top almost at the top all the way back here in 2013. So this goes all the way back over 10 years on this indicator. And it also called close to the bottom back in 2022, right? If you were to buy all the way down here, sure, the price dipped a little bit further to 15,000. You would have been buying at 19,000. But if you would have just held from when that indicator flashed, and let's say you bought at $21,000, well, you would be up over 300% on your income. So if you put in $10,000, it'd be worth roughly $36,000. Or if you put in $100,000, it'd be worth about $366,000 at the current price. So is the Pi Cycle top indicator flashing right now? No, it's not. So that just tells me that the top is not in yet. When that indicator flashes, I'm literally going to be selling everything. Why? Well, it's because these indicators are a lot smarter than me. So if we use the bar pattern for every single cycle to trace up when we transition from orange to yellow, I'll do that on the first yellow candle right here, whether it's bearish or bullish, doesn't matter. And I'll put it exactly when the Pi Cycle top indicator came in. And let's see roughly where that would put us for this cycle and how long it'll take from where we're at right now for every single cycle to get a time frame, starting with the previous cycle. So if we just put it up to where we're at right now, lining up the first day we transition from orange to yellow on the chart right here, and we just zoom out, that would put us at the 10th of February of 2025 for the top if it's like last cycle. Now let's put up the cycle before then, which was a little bit longer because the Pi Cycle top came in, as you can see last cycle, in yellow, whereas the previous cycle it came in at light green. So if I match it up right here to the first day that we transition to yellow and zoom out, we can see that puts us all the way to the 16th of August of 2025. Now, there were some steep pullbacks on the way up. The first one was right after the 8th of February of 2025. So could we push into February and then see a steeper pullback going into March, rally up further to the 1st of May, then the saying sell in May, go away. We see a summer lull. And then for the markets to heat up going into August, potentially September. Well, that's definitely possible. But let's put up the cycle before then, which had two Pi Cycle top indicators come in. So if I match it up to where we are right now, transitioning from orange to yellow and putting it on the exact same day, well, one of the Pi Cycle top indicators came in on this candle right here, which is actually on the 10th of October of 2024. So that's in the past, and we don't see a Pi Cycle top coming in. But the last one that came in was on the 6th of June of 2025. So based on the past few cycles, the Pi Cycle top indicator came in anywhere between February of 2025 all the way until August of 2025. Now that's a big gap. That's about a 7 months difference. But looking at all three charts paired up right here to where we are right now, every single one of them shows that we still have higher to go. One thing we can also do is use the fib retracement tool and draw from the Pi Cycle high all the way up here to the Pi Cycle low and extend it out. And you can see the 2017 cycle, we did well above a 4.236 extension this last cycle, if we measure from the pi cycle high to the pi cycle bottom, we did between a 3.618 to a 4.236. So just under a full extension. So if we were to just measure from the pi cycle high to the pi cycle low, even extending all the way to the bear market bottom, we're just a little bit above a 1.618. So a full extension for Bitcoin would be roughly $226,000. My price prediction for this bull run was around $190,000, which is a 3.618. So anywhere between, 2.618 to a 3.618, I think is realistic for Bitcoin. That's roughly $144,000 to $192,000. Now, what does that mean for the altcoin market? Well, as you already know, when Bitcoin pulls back, altcoins pull back. When Bitcoin rallies, altcoins rally even harder. So as you can see on the left-hand side of the screen, total 2 has pulled back from about 1.57 trillion, and we're sitting at 1.42 trillion. The next support is at 1.36. As you can see right here, that wicked off of the previous resistance from the 23rd of November. And so if we come back down within this support right here, I would want to see a bounce to the upside to respect this zone. And then to see us consolidate going into Christmas and eventually a break to the upside, we'd want to see some massive green candles come in here. And it's kind of similar to what we saw happen back here around the middle of November. We saw this support right here. We saw the price attempt to break out, inevitably get rejected, and come back down to respect the support, and then rebound off of it and work our way out of here going into December. And so if we just trace up the chart, obviously it's not going to look the exact same, but if we just put it up to where we are right now and just expand it out, this is just how price action works in a bull run during consolidation phases like this. It's very choppy. It's very turbulent. And as we start to break out from lows like this of what we're going through right now, we see back tests, right? So as we start to push up higher to like 1.5 trillion, we could see another flush out back down to 1.4 trillion before we continue up the rest of this bull run going into 2025. So I'm not concerned the slightest bit. And the reason why is because if we pull up the XRP to the US dollar price chart compared to the past, we did something similar, and I brought this up previously from May of 2017 until December of 2017. This was just a longer consolidation phase for XRP of like 200 days. Now, am I saying that this is going to last 200 days for XRP? No, because, right now we're only like 15 days in, but if we put up the chart and compare it to the past, you guys can see this A, B, C corrective wave down to the low of like $1.89. Same thing back over here, although the A was like a much steeper wick to the downside to 13 cents. If we just put it right around here at the candle body closes, the B wave was up here for a resistance forming a lower high. And then we saw the C wave all the way down to about 12 cents. And what we formed were just higher lows right here, while XRP just attempted to break out respecting this support before finally a massive green candle came in to push it above the B wave of resistance. So as you can see right here, we just rebounded off of the C wave. This is the support. We're ranging anywhere between 290 and 189. So anything that happens between this range is just consolidation before we continue the much more macro uptrend. And so that's why I say when in doubt, zoom out for XRP. But if we zoom in here, you guys can see that we tried to break above the B wave to hold as support, but we didn't do that on the hourly chart for that long. It was like a couple hours, upwards of $2.60. So a lot of people that FOMO in right here on a 1 hour candle body close, they can get wrecked because it didn't respect the support for that long. If we were to zoom in here even further, you can see resistance right here of $2.65 up to like $2.70. And so how long did we stay and close above, not just rally above, but how long did we close above $2.65? Well, if we measure from the 17th of December until the same day for about 3 hours. And so, yes, this was a technical close above the support right there, but we didn't respect it for that long. It's always good to see something like this take place and for us to hold it for a long period of time, much longer than just like 2 or 3 hours. Usually I like to see it take longer than that. There's no exact science to this, guys, right? Because as you see on the left-hand side of the screen, we just broke above and it didn't slow down. It didn't back test the support. So sometimes when we see a break of a resistance, we just blow right through it and there's no timing the markets whatsoever. So the science to this on how to trade these markets, the best strategy in the world is literally just accumulate low and just hold. I've been holding XRP since sub 50 cents, and I get it. You can't go back in time and buy XRP beneath 50 cents right now because it's at $2.30. But what you can do is watch to see where XRP bottoms out at in the short term and rebounds off of. And then what you can do is draw your trend lines. For example, from the C wave, then we would draw a trend line wherever the low is when we see another bounce. So at some point, I would expect a bounce for XRP, right? It's not just going to go down forever. I know your emotions are strong right now. You're thinking, oh, it's selling off. XRP is just going to keep doing this. It's just going to keep going down, and it's just going to keep going down. That's how it feels, right? But that's not how the markets work. And if you go back in the past and you look at the entire chart, you guys can see there's pullbacks on the way up every single time. Some of them are steeper than others. Some of them are longer consolidation periods than others. But what we do is we adapt our trading strategy. And so on the left-hand side of the screen, you can see XRP respected this ascending support multiple times. And so what I was expecting right here on the 16th of December was for the price to do this a lot sooner and then create an ascending support, just like we saw happen all the way back here during this phase for XRP, to rebound off of it before we see a God candle come in for XRP. So nobody knows when the God candle comes in. It's wild. It's crazy. Look at this period right here. Just massive green candles come in. This period right here, massive green candles come in. This period right here, massive green candles come in. So it's unexpected, and it happens usually while you're sleeping because of overseas trading volume, because they're super bullish on XRP over in like Japan, Asia, Abu Dhabi, etc. So when we bring up the relative strength index and we compare to the past, also we bring up the stochastic RSI. You can see the RSI right now is at 31, the stochastic RSI. The K line is at 11, the D line is at 10 in oversold territory. So what happened here on the left-hand side of the screen is this was a symmetrical triangle for XRP where you can just see lower highs, higher lows, and it coiled up. And then on the relative strength index, you can see resistance right here at the RSI at around 70 and also support all the way down here at about 37 within this horizontal channel while the price coiled up in a symmetrical triangle. And then the stochastic RSI fluctuated between oversold and overbought. So if I were to just mark on the chart when we saw bearish crosses and a time to sell XRP before the price crashed down each time, you can see on the price chart on the left-hand side of the screen on these vertical red lines right here where we were on the relative strength index and where we were on the stochastic RSI and where we were on the price chart. And then I'll also circle them for you as well too. One period we're at 29 cents and look, the price crashed down, bounced back up. We were at 27 cents and then the price crashed all the way back down here to this ascending support. We rallied up to 27 cents. We saw another bearish cross. The price crashed all the way back down to 18 cents. We rallied up briefly, saw a push up to 20 cents and then a crash back down to 19 cents. Then we saw a rally all the way up to 27 cents and then a crash back down to 19 cents. So very volatile, right? It just chops. But this is why you bring up the indicators here. And the smartest move that I like to do is I like to buy into bullish crosses well below 20 down here, because as you can see, that's when the price is oversold on the price chart each time. And we are roughly right around the ascending support each time we have seen bullish crosses to the downside. And then those confirm when it passes above 20. So where are we right now on the RSI? Well, we're down here near 30. Where are we on the stochastic RSI? We are below 20. So that's actually a great sign. And XRP's price is at $2.30 right now. It's well above $1.90. And so we don't know how low the price will go, but when that bounce takes place for XRP, just err on the side of caution, because you're going to see a lot of retail investors FOMO back in on a high, and then we're going to see the price, boom, crash back down. Do this again, boom, crash back down. Do this again, boom, crash back down until whammy, we see a breakout like this. So we just watched the relative strength index, and the relative strength index does this as well too. So it chops, right? It ranges between 100 and 0, and it usually doesn't go to 100 and it usually doesn't go to 0 because the bulls will aggressively defend anything that dips below 30 and the bears aggressively defend anything that goes above 70. Now the stochastic RSI, we watch 80 and we watch 20. So anytime we're above 80, err on the side of caution. I don't buy when we are above 80 on the stochastic RSI and near 70 or above 70 on the RSI, because the likelihood of the price coming back down is a lot higher than it just continuing up forever. So the strategy to get the best entry points is really, really simple. I buy when the RSI is oversold on 30 or below 30, and when the stochastic RSI is below 20 and the price is relatively low compared to previous zones of resistance and it's respecting support. So could we come down further in the short term? Absolutely, but that would just present a better buying opportunity if the RSI dips even further below 30. Because right now, we're at 37. We are in oversold territory compared to the past. Look at the last times we were down at this level. That's when the price was all the way down here forming the C wave. So sure, we could see something similar to what we saw happen right here, where we see a little bounce up and then a double bottom with a lower low, and then a rebound off of this for the price of XRP. That's why you have a dollar cost averaging strategy. And we teach all of that inside of Altcoin Pro University. We have about 1,000 members in here. You guys get access to 100 expert curated classes when you click the link in the description below, live weekly calls, daily market updates, global community to network with, get your questions answered. It's only $97 a month or $970 a year for the next 12 days. Then price goes up to $197 a month and $1,970 a year. So you can lock in at these price points, get grandfathered in for life. And we have a 30-day no questions asked money back guarantee. So if you guys want constant daily market updates of what's happening on the charts and other top altcoin picks that our research team sees that could even outperform XRP in the short term, then definitely plug in through the link in the description below. Watch this 26-minute video. I know you're going to love it. Now, getting into the rest of this video, Joe Biden came out yesterday and he said that Congress can no longer buy stocks. You'll see Congress members dump their stocks and do what? Well, they didn't say anything about them not being able to own crypto. So they're going to start moving in the crypto space. What will they be loading up on? Most likely Bitcoin and the other large cap projects. So XRP being one of them. As you can see right here on coinmarketcap.com, XRP is the second largest altcoin by market cap. They're going to load up on this freaking thing. Every single one of them knows that Ripple is working with all the major banks. So why wouldn't they be bullish on this? Plus, what else I'm going to share with you in a little bit that's going to blow your mind. But listen to this.
I wanted to ask you about specifically what the next administration is going to do in crypto as well. I know this is something that you're firmly focused on. It's something that the CNBC viewer is focused on as well. What steps will the president take to position the US as a leader in the global crypto market?
Yeah. Well, I've been a big fan of crypto for a long time, and so has my father. And I think he realizes that every country in the world is embracing it, and people are running. I mean, look at where we are right now in Abu Dhabi. I mean, they're putting billions of dollars into crypto, into kind of digital technologies. And if we don't do it as America, we're going to be left behind. And he wants to make America the crypto capital of the world. He's been very, very clear with that, and I applaud that. I mean, listen, right now, if you live in America, you want to go out and get a home loan, it takes you 90 days. How the hell does it take you 90 days to get a home loan? By then, by the way, the house is already sold. Your dream is gone. Zero chance you're getting it. Why does it? I mean, there is nothing on blockchain that can't be done better, faster, substantially cheaper, not pushing paper. I mean, the banking system that we have around the world, the modern banking system, is antiquated.
It's antiquated, and it's just a matter of time before really crypto not only catches up, but just really leaps ahead.
And so we're incredibly excited on a lot of fronts, and I think America will be the crypto capital of the world, and I fully support it. My father fully supports it. Our family, is fully embracing it. We believe in DeFi. We believe in CeFi. We believe that's the way of the future. And again, America, better lead the way. Otherwise, we're going to leave a lot behind.
So all of this also comes back to regulation as well. And one thing your father has spoken about is incorporating new legislation, even deregulation in the crypto space to really accelerate and move this forward. What does that look like?
Yeah. It looks like it's transparent. That's what it is. The people in the crypto industry are frustrated that no one's ever put together a sensible plan as to how to regulate an industry. They're fine with regulation, but they just want guidelines. And they've said that.
And the problem is you see so many companies that have been so unfairly treated, right? So many lawsuits, hundreds and hundreds of millions of dollars, people attacked, companies attacked. And they're just saying, just give us the rules of the road.
We haven't been asking to be deregulated. We've been asking to be regulated. So we have been saying, hey, look, just give us clear rules of the road.
Give us the rules of the road.
And we'll obey them. And by the way, if you give us the rules of the road, chances are the rest of the world will follow. And so I think sensible regulation makes a lot of sense. And a lot of people think that the crypto industry doesn't want regulation. That's actually not true. They just want sensible regulation that they can follow, regulation that's crystal clear, that's black and white. And they don't want to see people like Gary Gensler, who was absolutely a disaster for crypto. Everything he could to try and stifle innovation, he would do so. And those people have all been cleared out, and I think they will put together good regulation. I think we will have a clear roadmap, and hopefully the rest of the world follows that. Hopefully we can lead by example, because that's what we should do as Americans. And hopefully we truly are the crypto superpower of the world.
So crypto companies want clear rules to the road, clear regulation. When we look at the next few regulations and items on the agenda for crypto adoption as follows, 12 days until MiCA implementation on December 30th over in Europe. And then we have the European Union anti-money laundering KYC happening in 12 days. Then in Bulgaria, they got to start using the digital euro January 1st, 2025. And then Canada takes over G7 in 14 days. We got DORA in 30 days, not Dora the Explorer. This is just simply the Digital Operations Resilience Act in the European Union, aiming to strengthen the IT security of financial entities like banks, insurance companies, investment firms, and making sure that the financial sector in Europe is able to stay resilient in the event of a severe operational disruption. And one of the most important in 33 days is Gary Gensler resigns from the head of the SEC. And then we got the Trump inauguration on January 20th. Now, that's not even including what's happening in March when the Federal Reserve has a single day implementation on March 10th, where they will adopt the new ISO 222 messaging format for their FedWire fund service in a single day. Here's a clear breakdown of exactly how FedNow connects to the Interledger protocol and XRP. Right here, the following network is required for FedLine Advantage subscribers, and that's Transition Control Protocol, TCP, and Internet Protocol Communications, utilizing port 80, which is the World Wide Web, HTTP, that you basically type in every time you go to a website address, and port 443, which is HTTP protocol, over transport layer security and secure socket layers. Now, not to get too lost in the details here, but they now all use one network protocol, TCP and IP. Now, Interledger and XRP are the front runners to be the TCP IP equivalent in the world of fintech, where the most efficient and well-planned system architecture won the race in the end by a clear mile. The other contenders are relics in history and are now forgotten. And at this point in time, no one can compete with the XRP ledger's technical specs or the performance of the consensus algorithm. When we break this down really simply, IP is Internet Protocol. It's responsible for addressing and routing packets of data so that they can travel across different networks and reach the correct destination. Because every single device, your phone, your computer, banks, they connect to the internet and they're assigned a unique IP address. So the Internet Protocol is an IP address. Think of it like a digital home address that helps data find its way back to the right device. And TCP is just the transmission control protocol, ensuring reliable transmission of data between devices. So what it does is it breaks down data into smaller packets, send them to the destination, then reassembles them into the correct order once they arrive. It essentially establishes a connection between the sender and the receiver of data before it's transmitted, ensuring that both ends are ready to communicate. So how TCP and IP work together is when data is sent over the internet, like when you visit a website or when a payment is sent, IP is responsible for routing those packets across various networks, ensuring they reach the correct destination based on the IP address of the receiver. So TCP ensures that the packets are received in the right order, reassembled correctly, retransmitting any lost packets if necessary. And it gets much more complicated than that, such as the layers like application layer, transport layer, internet layer, link layer. I'm not going to get into all of that. The most important thing is the native cryptocurrency of the XRP ledger and is used as a bridge currency in cross-border payments. Now, listen to this. When two parties of different countries or different banks want to exchange money in different currencies, XRP would be used to facilitate that transfer quickly and cheaply, avoiding the need for traditional intermediaries like banks that cause delays, high costs, and other issues like having to pre-fund Nostro and Vostro accounts. So where the Interledger protocol comes into play with XRP is the Interledger protocol can route payments through networks that settle in XRP, allowing users to send and receive money in different currencies or different networks. So XRP is just going to essentially help ensure that transactions settle quickly and cheaply, making the Interledger protocol an effective solution for cross-border payments. Now, how they all connect with TCP IP is allows communication between different systems over the internet. The Interledger protocol is designed to enable interoperability between different payment systems or ledgers, banks, blockchains, etc. Just as TCP and IP enables communication between different devices on the internet, XRP is the currency that would be used for payments over the Interledger protocol, acting as the bridge between different payment systems. So here's an example. Imagine if you were to send a payment to someone in a different country. Well, instead of using PayPal, that's going to charge you like a 3% fee, take 5 days, hold it in your PayPal account, not get it to your family member over in another country, that would then be converted into their local currency. If you're paying the US dollar and they're in Europe, they need the euro. TCP IP would be the underlying communication protocol that allows data, in this case, a payment message, other than just like a picture to be sent, to be transmitted over the internet between your payment system and the recipient system. So the payment system that you would use in this example would be like FedWire Fund Service right here that is implementing their single day on March 10th into the ISO 222 messaging format, where messages are exchanged over networks that rely on the TCP/IP protocol, because TCP/IP is the transport layer that ensures that the messages, whether they're payment orders, account details, or transaction confirmations, are reliably delivered from one party to another across the internet, or even across private networks if they're larger transactions from banks. So in short, ISO 222 specifies the content and structure of the messages, while TCP/IP ensures those messages reach their destination across networks. So this is what the Federal Reserve is working with here. So the payment system in this case, FedNow, FedWire, would use the interledger protocol to figure out how to route the payment from your bank in your currency, the US dollar, to the recipient's bank in their currency. So interledger protocol acts as the payment router between different networks, and XRP is the bridge currency. For example, it would convert your local currency into XRP, transfer it through the interledger protocol network, and then convert it back into the recipient's local currency on the other side, settling the payment quickly and cheaply using XRP. Now, the only problem with this is that has led people to say the Fed is lying to you about adopting XRP is it doesn't say anything about XRP or Ripple on their official website. It just says that they're going to have a single day implementation on March 10th of 2025 of the new ISO messaging standard, and XRP is ISO compliant. So the Federal Reserve hasn't just come out publicly and said that they're going to use XRP. They've just announced certain companies that they're partnering with, and it's very clear that payments in the United States and globally are going to change. It's not a question. 3 to 5 business days for an ACH or a wire transfer is way too long. The real question is, how will Ripple and XRP be implemented into all of that? And more importantly, how will that affect the price of XRP long term?
That is going to happen no matter what. That is a given. We had a revolution in the physical delivery of goods with the shipping container, which changed globalization, started globalization. We had a revolution in the delivery of information with the internet. But what we don't know is, what is the TCP/IP of money? What is the shipping container of value? We don't know that yet. There's going to be one, though. That is a definite. And that's going to bring changes. And what I also want to get through is that one of those changes that I foresee and that I think is important is that the size of payments are going to shrink, drastically shrink. Many of you people here probably have a job and you probably get paid twice a month or every 2 weeks. Well, why is that? You probably pay bills once a month. Well, why is that? It's because payments are expensive and clunky. But if payments were cheap and simple, then those frequencies could go up. Money could be streamed at you while you're working. You could stream money to your landlord to pay for the place where you're staying. Now, I know those sound dumb, and I'll be blunt. Yeah, they are. And I'll tell you, if we were talking about email in the late 90s and you said to me, what are people going to use email for? I probably could not have given you the examples that is on everyone probably here, probably has a cell phone, probably has email on it, and probably has hundreds of messages that look nothing like postal mail or the messaging that existed in the late 90s. None of that could I have predicted. If you'd asked me if the internet had enough bandwidth in the year 2000, I would have said, yeah, it has plenty of bandwidth. Well, could I have imagined Netflix and on-demand video? That's ridiculous, right? The cost of bandwidth is too high for that. But the internet drove the cost of bandwidth down to zero. And if the cost of payments go down to zero, the world is going to change.
So when we look at these documents right here by Ripple talking about R3, Corda, different digital assets, it seems complicated to the average retail investor, but it's like any other protocol for web language, TCP, IP, HTTP, etc. XRP through the interledger protocol and the XRP ledger will be the value pushers. It will be the standard. Now, it's going to take some time, obviously. It's not just going to happen overnight, but banks will be settling with distributed ledger technology. Ripple and XRP will play a major role in that, along with other projects like XLM. And that's why XLM is up from 9 cents all the way up to 38 cents on this pullback right here from 64 cents, still below the previous high from May of 2021. We see Algorand as well, too, up from 10 cents all the way to 35 cents right now on this breakout, holding above resistance right here, getting ready for the next move to the upside. We can also see H-bar breaking out from the low of all the way down here at 4 cents, upwards of 40 cents. And it recently broke this key zone of resistance right here, and it's holding above it, even all the way back to the complacency stage high right here of the 30th of March before the bear market really kicked in. So if this level holds, I would just expect H-bar, XLM, XDC, XRP, Algorand as well too, to continue the rest of this bull run. Now, when we look at total 3 right here, which is the crypto total market cap excluding Bitcoin and Ethereum, this includes XRP and every single other altcoin. We're currently consolidating right here at the previous all-time high. And if we go back to the last cycle and what happened when we were at the previous all-time high, we did another consolidation as well too right here before making higher highs and higher lows, and then another explosive move to the upside. So in my opinion, we're going through this phase right here in the market cycle. And so the next move up for the market leading into February is where the most amount of money is going to be made. And you do not want to miss out by just holding one cryptocurrency. For example, our research team posted GOAT on the 13th of October of 2024 when it was right at a penny. And since then, it rallied to over $1 and is currently still up over 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap or 16 cents back on February 18th of 2023, all the way back here. And since then, it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. And the bull run is just getting started. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below. Get in right now. Watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree. If that's a goal of yours, our goal is to help 1,000 members set their portfolio up for life this month. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.